So why is it that if you look at the Dow today, it was a pretty good day. The Dow was up over 400 points. Not a bad day in the market. But then you look at the NASDAQ and it was down, S&P 500 up a little bit. So why is one index going up and the other one's going down? Is it like we have two stock markets, or just do people not really know how the indexes are comprised? And I think it's the latter. A lot of people really think that the market is the market, but depending on which index you follow in the stock market, you could generally have very different performance days. So we're going to talk about that, and we'll talk about a couple of other things, but I want you to know these market mechanics because they have a lot to do with how markets are constructed and hence how investment portfolios could be constructed as well. So pay attention. Today is back to school about the stock market. Here we go. All right. Thank you so much for joining me. My name is Mitch Goldberg. I'm a financial advisor with over 30 years of experience, 35 years to be exact. And I am with the wealth management firm, Client First Strategy. If you ask what's in a name, I see everything. That's why we're called Client First, because we put our clients first. So the Dow is up over 400 points. NASDAQ was down a little bit. And you could be scratching your head, kind of like me right now, and wondering what happened. So first of all, let's just take a gander on a couple of things and give you a quick update. Today is the end of the March quarter. It's been a pretty tough month, a pretty tough quarter. The S&P at one point today was about a little over 10% below its all-time high. It's the second time it did that. It went down to about this level a couple of weeks ago. It didn't close, though, below that level. So if you recall, on Friday, I did the live stream saying, what levels am I looking at to see if the market has more downside and when there could be maybe a turnaround. And I said we have to retest the March lows. We retested it. We retested it, and we barely bounced off it. I don't know if you call that a successful test or just, we need more time to test it. My guess is we need more time because bottoming in markets, it's not a moment in time. It's going to be a process. And I think significant damage in terms of enthusiasm for the stock market and in terms of good feelings about how good corporate earnings could be, I think that's been damaged for good reason. And I think we're just going to have to wait and see. And I think this is where the word patience has to be used. And now, everyone has to go back to becoming a long-term investor. It's easy to say, oh, I'm in it for the long term. I'm not worried about it when your NVIDIA goes from, $30 to 150 back down to like 145. Oh, I'm not worried about it. It's fine. But when it goes from like the 150s to like 103, where it traded down to today, a third of its value, that's when people start to say, I'm worried. And they forget about that long-term investor attitude that they were so brave with before. You see, it's easy to be brave when stocks are up, but when they go down, you start to wonder, maybe this is it. Maybe it's never going to go back up. Maybe I paid too much for the stock. Maybe this, maybe that. That's the tough thing about investing, and this is why we need a shakeout once in a while to get the weak hands out and the strong hands come back in. But let's just take a look at how the markets did, overall. I have the numbers here. All right, so for the quarter that just ended, the S&P was down 4.6%, snapping a 5-quarter win streak. Let me put that in perspective. 4.6% down in a quarter is not the worst thing I've ever seen in a tough quarter of the market. And it's amazing how, it's amazing how sensitive we've become to down markets. Because if I asked you how much was the market down, and asked, how much the S&P 500 was, by the way, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. But if I asked you how did the market do as measured by the S&P 500, you'd probably say it was probably down 10%, maybe more. But it wasn't even down half that. It was down 4.6%. So there's an awful lot of fireworks, a lot of fire and brimstone for an index that really wasn't down that much. All right. Uh, but the NASDAQ for the quarter was down 10%. That's up there, down 10% for the quarter. All right. It pulled back like 22% in a quarter, the second quarter of 2022. And that's when inflation popped up to about 10%. But it was only there for like a hot minute and then it backed right down. And and the Dow was down 1.3% for the quarter. I mean, that if that's what's getting you all nervous and crazy, like, oh my God, the market's so bad, you really need to reevaluate what stocks could do. I mean, we've seen markets where the stock market, as measured by the S&P, has gone down 50% or more in recent memory. NASDAQ even worse than that. All right. So you have to put it all in perspective. But from its record, the S&P is off about 9%. The Dow is off about 14% from its all-time high. The F- Dow, I'm sorry, the Nasdaq is off about 14% from its high, 9% for the S&P, and about 4% or so, maybe 5% for the Dow. Hasn't been that bad, but for the month, it's been a lot worse. So if you're going by recent memory, just the most recent of recent memory, you know, March has been a pretty tough month, especially considering that the S&P hit a new all-time high just in February. But eventually the market does go down from highs, and we will just have to see. I don't know what the outlook is going to be the outlook for first quarter earnings outlook is not fully known. Too much noise in the background, and we're going to start getting Q1 earnings next week. Okay, so by by early to mid next week, okay, you're going to start getting earnings. The other thing you're going to get next week is the non-farm payroll figures. That's the ultimate biggest figure there is that the Federal Reserve tracks, Department of Labor employment figures. So we're going to see what the employment outlook is for the month of March, which is it's the second full month since Trump's been president as number 47. He was 45, but it's 47. And between that and the color that CFOs and CEOs give us about the upcoming quarter, the second quarter that's going to start tomorrow, that's going to really be what guides the market for the next couple of weeks. By the way, Tesla is down 36% in the first quarter for its worst period since 2022. I know a lot of people are, it's amazing. Tesla was the stock that environmentalists wanted to own. It's the car that, if you cared about the economy, you drive an EV. And I feel like, it was something that Californians and people on the left drove. And now it's becoming the opposite. It's becoming something that the hard right is defending and wants to join, to do. And now they love it. It's amazing how it's amazing how it switched for the love of Tesla to the hatred of Tesla, and how the both sides of the aisle, so to speak, have come to have come to feel completely different about it. All right, so let's quickly talk about where the major averages did close, and I want to look at the bond market. Okay, the 10-year yield was closed at 4.2%. And that started the year at about 4.5, 4.6%. So yields have come down a lot. 4.5, 4.6 down to 4.2 is a pretty big move in the bond market. And it's been straight down in yields, and that pretty much tells you that investors are really worried about the economy. If people we're not worried about the economy. Interest rates would be higher. So, we'll see. It was expected the Fed could cut rates this year, maybe 2 times. It might be 1 time. I saw somebody say they could see it 3 times. We're just going to have to wait for more information. I personally am not making investment plans or financial plans, short term or long term, based on what the Fed may or may not do over the next 9 months. There's only 9 months left in 2025. So I'm not really making any plans on that. It's long term. The plans are based on you. And as you get closer to needing your money to pay for your bills and to replace your employment income, the more we start to get a little bit more conservative for you. And it's just a gradual glide path to get you through your working years and keeping you strong financially in your retirement years. All right. So that's that. Let's talk about um, let, let's let's talk about the difference between the Dow and the NASDAQ and the S&P. But basically, the Dow had a pretty good day today. If I said, "Oh, well, the Dow is up 400 points today," over 400 points, and after being down 700 points, over 700 points on Friday, it's a little bit of a rebound. It helps. But the Nasdaq still went down after a tough day last week. So let's see if we could take a look at the major averages. All right, let me put myself up there, and don't worry, your eyes don't deceive you. That is pretty small. So let me make this a little bigger so you can see it. All right, there we go. That's better. Okay. So if you the Dow Jones is 30. See the Dow 30 chart. The Dow Jones Industrial Average only has 30 stocks. I don't even like to call it the Dow Jones Industrial Average, which is its official name. It's not an industrial average. If you want to follow an industrial average, you follow XLI, which is the ETF, the S&P Depository Receipt, known as the Spiders ETF, that tracks the industrial sector of the S&P 500 stocks. That is truly industrial and gives you a much better view of how the industrial portion of the economy is doing. Which, by the way, it's done pretty well. But if you look at this, okay, I have here in order the highest price stock, which is Goldman Sachs, $546. See that? All right. And then you have United Health, which is $523, and Microsoft 375, Home Depot 366, and Visa 350, and Sherwin-Williams just about 350. These are the stocks. The higher price the stock, the bigger sway it has in the Dow Jones Industrial Average. So even though Apple is in the Dow Jones Industrial Average, it's the 15th highest price of the stock, all the way down. Where are you, Apple? There it is. Okay. It's 222. So even though Apple, as a market cap, it's a bigger company than any of these companies, it's about, well, maybe it's about the same size as Microsoft, but it's bigger than United Health and Goldman Sachs and Visa for sure. But those companies like Visa has a bigger impact, and Sherwin-Williams and Caterpillar, they're going to have a bigger impact on the Dow than Apple, even though Apple's a bigger company, because the Dow Jones is price weighted. So of the 30 stocks in it, the higher the price of the stock, the bigger of a impact it has in the index. I didn't say valuation. Just because a company is a $1 trillion valuation at a high stock price, like 500, for example, there could be a company that has a $3 trillion valuation with, with a smaller price tag, but the one with the lower valuation, but the higher price tag will have a bigger impact on it because it's not market cap weighted. If you take the number of shares of a stock and multiply it by the price, that's the total valuation of a company. That's called the market capitalization or market cap. So the Dow Jones doesn't care about the market cap. It just cares about the price. So you could have a small company with a higher price of the stock that has a bigger sway in the Dow than a big company, much bigger company, but it has a lower price. So price of a stock and the valuation of the company are two different things. And the Dow goes by price of the company. So if you look at today's winners and losers, there were only 5 stocks that were down today in the Dow. So 25 out of 5 stocks were up. So that's a pretty good, That's a pretty good ratio in any given day. All right. So that's really good. And the ones that are down, they weren't even down that much. Boeing and Amazon down a little over 2%. Well, Boeing almost 3%. Amazon down about 2.5%. But that was it. But if you look at the gainers, Walmart was up 2.64%. I'm sorry, I'm talking percentage wise. Walmart was up 3.1%. Sherwin was up 2.78%. Home Depot up 2.3%. So there's a shift going on where investors are wary of Mag 7 stocks and the rest of the and most of the tech court, like Broadcom, I'm talking about. And it's not just the Mag 7, but they're moving into other things like IBM, like Coca-Cola, like Home Depot, where they could think that they could find valuation that's more suitable for them and where they think they could be a little bit safer and have a little bit more upside. So that's how you get a Dow up over 400 points while the NASDAQ goes down and the S&P is in between there. It was up about 0.5%. So that's just the way the indexes are comprised is going to tell you a lot about how they're going to do. So that's really it's really about it for today. It was a tough quarter, not horrible. Let's not make it out to be worse than it really was. We've had plenty of tough quarters in the past. It's just been a lot of up and down volatility. Again, what we're going to look at for the second quarter is this: in about a week, you're going to start seeing Q1 earnings and revenues come out. But more importantly, you're going to get a lot of color on the upcoming quarter that we're going to start tomorrow. And that's going to be really important what CFOs and CEOs have to say about it. And you're going to get the non-farm payroll report that's going to be coming out on Friday. So that's going to be a pretty significant number as well. And until we get past those two events, I just think investors are going to hold their breath. And of course, I must give mention that, President Trump calls April 2nd his D-Day or Liberation Day. So that is, I don't know what the hell is ringing on my phone, but it's driving me crazy. Is it my phone? I don't know. Do you guys hear that? Is it coming through into the headphones? Because it sounds like it's right in my headset. Part of our Zoom phone. It's really annoying. So, yeah, Liberation Day, April 2nd. I'll have a lot more to say about that in the coming days, but I've been talking about tariffs and politics a lot, and I want to teach you other things because there's other things to know about besides the current political climate, which will change. It always does, folks. It's the tariffs are not permanent; they're just executive orders, and that could change in a whim. That could change with another administration. It might even change because the next election is in November of 2026. So it's not that far away. It's it's about a year and a half away. It's not that far away. So a lot of politicians are going to start getting nervous if the economy goes down. And when that happens, usually we flip to another party and give another party control of Congress. So if the current party wants to keep their control, they might be getting nervous about that. All right. So we'll see what Liberation Day looks like, but we'll have a lot more to say about that. But there's other things to talk about besides that. And I've spent like 90% of my live streams in the last 2 months talking about tariffs. All right. That's about it. Have a great day, guys. See you tomorrow.